What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. Make sure you hit the like button if you enjoyed this video. It really helps the channel grow. Again, it's a free channel. Just trying to provide free information, free advice. Not trying to sell anything here. So if you do like the videos, make sure you give them a thumbs up. It really helps the channel grow. And thanks to those who continue to watch and give the thumbs up. I do really appreciate it because, again, I'm just trying to spread this information to as many people as possible to try and help as many people out as I can. Also, make sure you hit the subscribe button, notification bell. That way you're notified when we release videos. We do release bonus content from time to time, so you want to make sure you're notified when we release that bonus content. But our nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings. So if you want a deeper dive into how we set up our charts and our trading levels and the color coding we use for different time frames, things like that, check out the bonus content on our YouTube page. And for more information about the strat, check out the description in the video for more free information on that. I encourage you to watch the full video because along with these triggers and targets, we give some pretty good insight into the price action on all time frames. So without further delay, let's just go ahead and get into things. Today we will look at, we'll recap today's price action. Then we will zoom out real quick to look at the week, month, quarter, and year like we always do. Keep a level set, not stay too zoomed in. Keep a reference on where we're at in relation to price on a higher time frame. Then we'll zoom back in, set our 4-hour markers and our triggers and targets for tomorrow, Thursday, October 23rd, and we'll review the triggers and targets for the week, month, quarter, and year. All right, so just looking at today's intraday price action, I want to first just, again, kind of level set before we look at the price action for day and see where we're starting out, right? We've got the previous high day, previous low day, a pretty short range that we had yesterday. 4203 to 4052. For SOXL, that's not a big range. We've got the overnight high slightly below the previous high a day, and the overnight low below the previous low a day. So we know that, if we get higher lows above opening print, we're looking to target. If we open above overnight low but below previous low a day, we're looking to target previous low a day, then overnight high, then previous high a day. Again, looking for higher lows at or above opening print to get into those calls. If we get the opening print and we push to the downside, then obviously the overnight low is going to be our first and only target from a scalping perspective, and then you'll want to kind of flip over to your 4-hour and day triggers and targets that we'll go over here in a minute. Right, so we did get price action to the downside, right? We opened right at the lows of the day. And again, we've got the week flip up here at 41.16. So any price action below that level, the week is red. Any price action above that level, the week is green, obviously. And we can see that on the 5-minute, we took a little bit more risk today, right? Not waiting for the lower high underneath opening print, just because we were kind of recognizing where price action was. If I can, let me bring up like ADQD. If we look at the internals, if we look at the internals, right, today we opened up, the breadth opened in negative territory, negative 800, and just pushed straight down. If we look at vol QD, if we look at, basically money flowing in versus money flowing out. Sorry, I don't know why my charts are going so slow tonight. Basically, there we go. So again, let's see, today, Wednesday, we started out, we opened, just barely above the zero line, and it just was going straight down basically from the beginning, right? And then pushed below the zero line, and then some pretty erratic action down here, but it was all below the zero line and at the negative 400 million mark, which is what we designate, below there is the trend lower zone basically, right? And then if we look at the tick Q, let's see if I can type. There we go. If we look at the tick Q, which is basically just another measure of breadth, let's see, Wednesday starts here. And again, this is on a 5-minute, so it's kind of noisy. But Wednesday starts right here. And oh, goodness. I don't know. Sorry, I apologize. I don't know what's going on with the charts here today. Moving very slow. Come on. Well, I won't delay on that any longer, but basically the tick was at and below the zero line for, the whole morning. So there wasn't a whole lot that you had to really look for to see that we were probably going to be pushing to the downside at the open, at least. If not the whole day, at least at open. Oh my goodness. I do apologize for these charts here. Thinkorswim is really delaying today. All right. So anyways, so we went ahead and entered puts here because, oh my goodness, we're right here, right? So we entered puts right here because although it was technically like a higher high on the 5-minute time frame in relation to where the last high was on Friday, on Tuesday, yesterday, it was basically a lower high situation. So we went ahead and entered a little bit riskier than what we would normally wait for, looking for the lower high underneath opening print, but seeing the overnight action and, looking at like Texas Instruments reporting, it kind of lets you know we're going to go to the downside. So we went ahead and failed below, we entered here, went below opening print and previous low day. So I had more confidence in that, especially when it kind of hung up here. And then after that just dropped out. We went to the last week's 50%, which dash purple line right here. There's a reason why we keep this level on every week. We talked about it last week, how much it came into play, how much it was a bounce point. And in this situation, it tried to bounce, but on a 15-minute chart, this is like a wick right here, right? 5-minute chart, we're getting the candles, but 15-minute, that's like a wick. So we did push down through, and then we got a little bit of a bounce, but you can see we rejected here right off this 78.6 of that fib extension of the bull flag from the April 7th low to July high, right? So with the rejection there, if you were waiting for the lower high underneath opening print, you didn't get it on the 5-minute, but also by that time, the market had been open for about an hour and a half. So you probably would have wanted to switch to the 15-minute anyway, but at this point, or not switch to it, but basically you want to have multiple charts on the screen if you're scalping, right? So you can see here we got the lower high on the 15-minute. So you could have re-entered puts here. Got the lower high here, pushed down all the way almost to the cent, the bounce off of last week's low, which is this smaller dash purple line. Again, we've got the 61.8 fib extension of the bull flag just below at 35.69, and we've got last quarter's high at 35.49 right here as well. So a lot of support. We've got this hourly broadening formation that's coming down here. This 15-minute broadening formation hadn't formed yet, but once the bounce had taken place, we put that on the chart. But we did get a pretty solid bounce. You got the higher low here, higher high, and then it just pushed up through the end of the day, right? I think sellers were pretty exhausted at that point. Things were pretty oversold. You can see here down at RSI, which we don't even really talk about that much. It spent most of the day down below that 30 line in RSI. So a good trending day for once. And even with the trending day, there was the opportunity for the bounce to the upside as well. If you wanted to take a higher risk play, just knowing that this was a pretty good bounce point for the different levels that we pointed out here, you could have entered calls with the higher low here on the 15-minute to be pretty safe, and got that price action to the upside, right? So that's how things were intraday if you're looking to scalp or make those shorter trades. If we look at the day chart, and let's bring up something cleaner. All right, so if we're looking at the day chart, we did get a lower low, right? So, call it what you wanted at this point because it's coming from a higher high, right? So we're just creating a broadening formation at this point, really. Let's see if we just go ahead and bring up our tools, if Thinkorswim will work with this right now. Right, there's the daily broadening formation there. And then say we were to bounce tomorrow, all right, recover from this overnight push to the downside. If we were to bounce tomorrow and push to make a 2 up, we just got a daily broadening formation here, right? So sideways action, broadening formation being formed, not a downtrend just yet. The push up and get the 2 up, but don't get a higher high, and then we get the push back down. Now we're looking at a downtrend possibly being formed with the lower high, lower low. Then we look at the levels like the month and quarter flip. Excuse me, the 50% of the bull flag from the April 7th low. We've got the gap down here at 31, and just below it the 38.2 fib. So do we go fill that gap? Do we wick through from like a day or week perspective to go down and fill this gap here? Try and flip the year red once again. If the year flips red, then we go from what we've been looking at here, full time frame continuity to the upside, where the week, the month, the quarter, and the year are green. If we push to that level, we've obviously flipped the week, the month, and the quarter red at that point. We flipped the year red. Now we're in full time frame continuity to the downside. Now bears are more in control, right? Now it could just push through, fill this gap, and push back up and flip the bears back in, or bulls back into control. But if that were to happen, we would definitely have to take notice of that and prepare ourselves for more downside action and make sure that we've really got our downside levels locked in. All right, we'll have our downside and upside levels here in a second when we get into our notes, but that's just how we're looking from the day perspective. We're in that range that we talked about, right? If we shrink things up a little bit and we look at, there's that flag of the bull flag, right? Then we had 11 weeks of sideways action between 24 and 28, right? The same thing could be happening here, just maybe with the wider range, right? We've got kind of a flag, a flagpole being created here, and then a flag. Or even if you don't want to look at it as a bull flag situation, we got the push up and then bullish consolidation basically up here, right? Just sideways action at this point until we break down. And even if we break down, the real, I could see us going to this 27, 28 level, because that would be the retest of this 11-week range, right? And again, it wouldn't be the end of the world, right? So we're still looking really good from a higher time frame perspective, which we'll get into here in a second. But yeah, for the time being, it would be, if you're a bull, or if you're a shareholder, if you're not someone who shorts the market or sells calls or anything like that, then it might be a tough time for you. You may also just look at it as, let me wait till we get to a bottom and then I can load up on more shares or buy calls at this level, right? So again, it's never the end of the world. Price action, we like to work it either way, right? It can work both ways for us. So that's what we have from the day perspective. Again, moving sideways. Let's go ahead and bring up the week. We talked about how price action went down and bounced, basically to the cent. Basically to the cent off of last week's low. Oh my goodness, what is Thinkorswim doing to me? There we go. So we can see this week's price action pushed down almost to last week's low. So we do have a very high chance of going red 3 or forming a bearish engulfing candle on the week perspective tomorrow, or we've got 2 more days of the week. So tomorrow, if tomorrow goes sideways and forms like a bear flag on the 1-hour chart, or even the 4-hour chart, possibly starting a bear flag, and then Friday we push down, we still have a very high possibility of running a red 3 or forming a bearish engulfing candle on the week perspective. So again, it's not the end of the world, because we've got all this room down here that we can put in a higher low. We've got plenty of support. We do have a couple of gaps to the downside, but to go along with those gaps, we've got support. So welcome it, right? If we get that push to the downside, get your puts, sell your calls, right? And make a little bit of money to the downside, regroup for the bounce. If we do get a bounce, then just continue to make sure that we get that higher high. And if we do get the lower high, especially on the week perspective, then we look to really get into puts and selling calls at that point, right? But until that happens, we're still looking pretty bullish, right? Very strong bounce off of that April 7th low. We've made lots of higher highs on the week, month, and quarter perspective. So let's just take a look here at the month. Once again, the chart moving slow. I apologize. So let's bring up the month here and a cleaner chart for us. get rid of those weekly broadening formations. There we go. So we can see we are still 2 up, but look at that wick that has formed, right? So we are running the chance of no longer being in force on the 2 up from the month perspective, right? Again, not the end of the world. Look at this recovery that we've had. We've got all the way down here to 2350, 22 level to make a higher low on the month perspective as well. So after this kind of rip to the upside, you do want to get some type of pullback to be able to regroup. Reposition if you need to, take profits if you need to, and enter shorts if you need to. But we do, welcome pullbacks. It's just all part of the normal price action for a market, right? You don't just go straight up. So look to capitalize off of those opportunities. Nothing really from the month perspective to capitalize to the downside. It would all remain to the week and lower at this particular point. If we look at the quarter, again, we are still in the I apologize. This video is going to be a little longer than normal. Oh, man. What is going on? There we go. Again, I apologize. Okay, so we are still in this one combo 2 down, combo 2 up because we're above this 36.15 level. Again, we're getting pretty close to pulling back and not being in force on that trigger anymore, right? So if we go below 36.15, we've got to look at it as just a triggered strat reversal, and we'll have to wait to see what happens, through the rest of the quarter. Keep an eye on the shorter time frames. So we do want to just bring attention to the fact that we do run the risk of not being in force on this one combo 2 down, combo 2 up on the quarter. But as long as we are above 36.15, then things are still looking pretty bullish from the quarter perspective. And then from the year, we talked about how we turn things around with the 1 2 up 2 down triggering. Should have went to the 621, didn't. It went to the 723 in April, so we did create a higher low so far on the year perspective, and we just want to make sure that we're closing towards the top of the candle at the end of the year to give us the best chance of going 2 down 2 up next year, targeting that 70.08 level. All right, so that's what we have from a zoomed out perspective. Again, no need to get real nervous or anything like that at this point, because from a higher time frame perspective, things are still looking pretty bullish. Not not as bullish as they were, but we're still not breaking down or anything like that. So we just want to keep in mind that pullbacks are part of the game, and we just want to make sure that you position yourself properly, whether you're going to capitalize on shorting the market or just waiting for entries, for lower entries, if you're just looking to play things to the upside. All right, so let's look at the triggers and targets for tomorrow, Thursday. We'll look at the scalping perspective first. That's where we always start out. That's where the day starts out, right? And I mean, it can trigger things on the higher time frames as well, but if we get price action that does open within within yesterday's price range, right? So looking tomorrow, we'll have the previous high day up here at 40.81. Right now, the overnight high, well, let's just say the overnight high opens at 40.18, or is at 40.18. The overnight low is 37.44, and then we do have our previous low of day down here at 35. So say we do have just this more consolidated range overnight, we stay within yesterday's price action, and let's just say let's get the right tool out. Let's just say price opens here, right? So we get price opening at 39.12. The rules of the game are higher lows at or above opening print get into calls, targeting the overnight high and previous high day. If we get the opening print and push down and then a lower high at or underneath the opening print, then we want to get into puts, targeting overnight low and previous low a day. Right? So it's pretty simple. That's the repeatable strategy that you can use for scalping, every day. Now the key is adhering to the rules, right? Or if you are going to take a higher risk move in buying, like we did today, a put that's just slightly above opening print, then you want to make sure you adjust your risk profile on that trade, right? If you're not going to tighten up your stop, maybe you don't go as heavy, or I don't know, however you want to adjust it. You just want to make sure that you're taking account for the fact that you're taking a little bit riskier of play, right? So that's enough from the scalping perspective. Let's go ahead and look at the intraday view. We'll look at the 4-hour time frame first, and we can see that again we're starting to get that consolidation, kind of starting to form a range here between this 36 and 43 level. So we'll look to kind of play it how we did back when we were going between 24 and 28. Difference is we got a slightly bigger range, so may have a little bit more to play for in each direction, right? But if we do, because look, we closed a green hammer, solid green candle with the wick at the bottom for the second 4-hour today, right? So it's not bearish. It's definitely not bullish, right? But it takes us out of the super bearish category that we're in with this big red 2-down candle, right? So there's a perfect possibility, even though we are down in after hours right now, that we overnight we continue to push up, maybe some earnings in the morning, things like that, get us pushed up. And even if we don't gap up, if we open up high enough in the range and we get a push up in the morning, then we go 2 down, 2 up, triggering at 38.48, and the magnitude for that move is the high of this candle to the left of the 2 down, or this green 2 down, at which the high is 40.81. So decent amount to play for on an intraday play, right? That also would, if we get to this level and go above 40.81, you could say it's a 1 combo 2 down, 2 up at that point. And your magnitude at that point is the high of this 2, which if you reach that, you could say is triggering another 1 combo 2 down, combo 2 up, which would then trigger the high of this week, which is that 43.04 level. So you could get into a domino effect type of action, especially like I said with earnings. The market is so susceptible to headlines at this point to push it up or down. If we get good enough headlines and earnings and things of that nature, we could get a push like that, right? It's not uncommon. Look at this big red candle here. SOXL is a high beta ETF, so you can get that type of move. That would also flip us back green on the week and put us back in full time frame continuity to the upside. So again, it can go either way, and we just want to be prepared. Now that's the upside. To the downside, if we do continue down, we've got to push back down through all of this. But if we do open up at the low of 35.97, that's just 2 cents above last week's low. So we go below that, then we're a red 3 or a bearish engulfing candle on the week, right? Now, again, we talked about the support that we have with this 61.8 fib of the bull flag. Last quarter's high, last month's high is there actually as well. We've got the market makers expected move low here at 34.78. If you're not familiar with that, check out our weekend video. We'll go into more detail about that. And then we also have the week and month flip here. So I would say those are some pretty good levels of support. Pretty good bounce point. This is also the top of this range that we had right here. On this, maybe you could call it a little bull flag as well here, right? So we do want to recognize that we have had a good push down. We're back towards the bottom of the range. If we do get another push to the downside, we want to just kind of make sure we're watching things and not getting too far ahead of ourselves, right? At the same time, if it's your portfolio, so right, you do with your money what you'd like, but that's just how I would be playing it at this particular time. If we look at the day chart, let's go to the day. Get a little bit cleaner chart here. All right, so the day, again, we got this kind of hammer candle, but it is red. We closed below where we opened. Looks like we could have got that bounce off the 61.8 fib level of that bull flag fib extension, where we kind of got a bounce last week as well. So looking at the bottom of the range here, do we get that push up? If we do get that push up that we talked about on the 4-hour, and we do make it to magnitude on the 4-hour triggers and targets, then that triggers the 2 down, 2 up on the day, right? So that triggers that 40.81. And we're first targeting the high of this candle, 42.03, and then targeting the high of this candle as well, which is 43.04. So that would be probably the ultimate magnitude for the day, knowing that we could still get that wick up to that 100% fib extension as well. And if we really get running, who knows? But look for some corrective activity up around this level. If we do get that push to the downside, it's the 2 up, combo 2 down. if you can really want to look at it, it's a kind of a combo 2 up, combo 2 down at that point. And the magnitude of that move would be the low of this 2, which is also the month and quarter flip, and just slightly below that 61.8 fib, just above that 50 fib. So again, another possible bounce point if we do get down to this level. You got some good levels of support. All right, so that's how things look on the chart. Let's look at our notes just so we can look at the hard numbers, right? And so looking at the notes for Thursday, October 23rd, there will be 46 trading days left in the year on Thursday, and the close price for Wednesday's action was 38.39. That does put us below that 41.16 open for the week, so that flips the week red. So that's why we've got in our notes here, the week flips back green at 41.16. Right, the month, the quarter, and the year, they're all still green at this point, but we do know what those levels are where they'll flip to red. Again, the market maker's expected move for this week was $5.52, giving us a range of 45.81 to 34.77, and we know where our gaps above and gaps below are. We talked about the basic rules about scalping, looking for higher lows at or above opening print, and looking for lower highs at or below opening print to get into puts. I guess I didn't say calls at the beginning. So higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts, right? So we've got that covered. That's pretty simple, easy at this point, right? So, but looking at the 4-hour chart, if we do get price action to the downside, that gives us a two down continuation, triggering at 35.97. First target is 35.49, then 34.78 and 34.17 for our extended targets. To the upside, that would trigger a 2 down, 2 up, triggering at 38.48, targeting 39.26 first, because we are in a slight, sideways to downtrend on the 1 hour. The full magnitude of the move is 40.81 for the 2 down, 2 up, but just in case we do get more downside pressure, we could see it around that 39.26 level. So that's our first target on the way to the ultimate target of 40.81. On the day, if we go to the downside, we'll have a 2 down continuation, triggering at 35.97, targeting 34.17, extended targets of 33.57 and 33.18. If we get the price action to the upside, we get that 2 down, 2 up, triggering at 40.81. The magnitude of the move is 43.04, extended targets of 43.37 and 43.80. All right, so we went over those on the charts. I won't go back to the charts for the week, month, quarter, and year. We went over those earlier in the video. Just hit the rewind if you want to see those again. But we get on the week, again, we did trigger the 2-1-2 up. That's why it's underlined. But we are at risk of hitting that red 3 or bearish engulfer if we go below that 35.95. If we do go below 35.95, first target is going to be 34.17. Second target is 33.18. Followed by 31.36 and 30.68. Kind of gave some additional extended targets there, but when it goes to the downside, it tends to drop pretty quick, pretty hard, right? So that's what we've got from the week. On the month, we are still in force in the two up. That's why it's not only underlined but bold, right? So we're still above 35.49. And on that initial push up, we did hit that 41.19 target. Didn't quite make it to that 43.80, so that is the next target to the upside if we can get the push back to the upside, followed by the extended targets listed out here. All right, for the quarter, we did trigger the 2 down, combo 2 up at 35.49. It reached its magnitude at 36.15, which then triggered the 1 combo 2 down, combo 2 up. And we did reach the first 2 targets at 38.89 and 42.04. But from the quarter perspective, we're still looking for the extended targets of 44.54, 46.79, and continuing, right? The reason why we have these intermediate targets before we get to the magnitude is because 70.08 is far away. We're not going to get there in 1 quarter. So we just want to make sure that we've got some targets on the way up, just depending on however long your contracts are, you have till expiration, right? If you got November, December, January contracts, you want to look at these targets a little bit closer, right? If you got January 27 or I'm sorry, May 26 or beyond, really, then you want to still keep your eye on these. But as long as you're above that 36.15, the ultimate target is still going to be that 70.08. And then on the year, we talked about when we looked at the chart, we did trigger the 1, 2 up, 2 down when we went below 2350. The magnitude was 621. We didn't quite make it there. We got that 723 like we talked about, giving us a higher low at this particular point, and kind of giving us a green candle on the year with that reversal. So don't think we're going to run this green 3 or bearish engulfing candle on the year. We've got to get up to 70.08 to do that. But for now, we are looking still pretty positive for a good setup for a 2 down, 2 up in 2026. And that's when we would target that 70.08. That's it. Those are the triggers and targets for, scalping all the way up through, swings, leap trades, whatever you want to call them. I hope everybody enjoyed the video. Again, if you did, give it a thumbs up. It really helps the channel grow. Again, thank you to those who continue to watch the videos. Thank you to those who continue to give us a thumbs up. Lets us know that we're doing this for something, right? Not just for our my benefit, but I just wanted to spread this information to as many people as I could, because trading doesn't need to be hard, right? It's not going to be easy, but it doesn't need to be super hard. There's ways to simplify it for yourself, and by using things like the strat to really break price action down to a very basic level of 1, 2, and 3, and then layered on with nuances, with broadening formations, previous high day, previous low day, overnight high, overnight low, and opening print for scalps, things like that. We just want to make sure people have the tools to make trading for them easier, right? And that's really all we're here for. Not selling anything, it's just a free channel, right? So if you did enjoy the video, give us a thumbs up. We'd really appreciate that. But at the same time, we hope you enjoy the rest of your night. Hope you get some good rest. If you're watching this Thursday morning, we hope you had some good rest Wednesday night. We just hope everybody's refreshed and ready to trade on Thursday when price opens. And we look forward to seeing you out there.